Imagine investing in Amazon in the late 1990s, or Nvidia before AI. Today, investors are asking a different question. Could Anthropic become the next trillion-dollar AI company? Because the numbers are unbelievable. Founded in 2021, valued at roughly $4.1 billion in 2023, then approximately $61.5 billion in March 2025, $183 billion in September 2025, $380 billion in February 2026, $965 billion in May 2026. That's a reported increase of more than 235 times in just 3 years. And almost nobody is talking about it. The craziest AI growth story. Let's put this into perspective. Most startups spend decades trying to reach a $10 billion valuation. Anthropic reportedly moved from $4.1 billion to $965 billion in about 3 years. That means private investors potentially saw gains exceeding 23,000%. Not in crypto, not in meme stocks, in an AI company. Why is Anthropic worth so much? Answer is simple: the Claude. Anthropic's AI model is becoming one of the most serious competitors to ChatGPT. But that's only part of the story. The real asset is infrastructure. Anthropic sits at the center of enterprise AI, cloud computing, foundation models, software development, and corporate automation. Every one of those markets is worth hundreds of billions. Amazon's $8 billion bet. Here's what most retail investors miss. Amazon isn't investing billions because it likes chatbots. Amazon wants Claude running on AWS. More Claude adoption means more cloud usage, more AI workloads, and more AWS revenue. Anthropic's success can directly benefit Amazon's cloud ecosystem. On June 22, 2026, Micron Technology announced a strategic partnership with Anthropic that includes advanced AI memory, storage solutions, and strategic investments. As Claude AI scales, demand for memory and infrastructure grows, positioning Micron as a key beneficiary of the expanding artificial intelligence ecosystem. Our compute strategy depends on getting every layer of the stack right, and memory and storage are central to how efficiently we can train and serve Claude, said Tom Brown, Anthropic's co-founder and chief compute officer, during the event. Google's billion-dollar decision. Google also invested heavily. Think about that. The two largest cloud providers in the world are effectively supporting the same AI company. That's extremely rare. Anthropic gains are 1. Capital, 2. Compute power, 3. Distribution, 4. Enterprise access. Few startups have ever started with advantages like this. Valuation alone doesn't matter. Revenue matters. Anthropic reportedly crossed approximately $4 billion annualized revenue run rate. For comparison, OpenAI reportedly crossed around $10 billion annualized revenue. Anthropic isn't just growing users, it's generating real business revenue. That's why institutional investors care. The IPO question everyone wants answered. Let's assume Anthropic eventually IPOs. If the company enters public markets near current private valuations, investors will face a difficult question. Is this already priced for perfection? Or is AI still in the early innings? Remember, Nvidia was once considered expensive, Amazon was once considered expensive, Tesla was once considered expensive. The winners weren't determined by valuation alone, they were determined by execution. The big risk here's the risk nobody talks about. AI is becoming a capital war. Training advanced models requires electricity, data centers, GPUs, and it's billions of dollars. Anthropic may be growing rapidly, but so are its costs. The company still has to prove it can convert AI leadership into long-term profitability. Final verdict. If these valuation estimates prove accurate, Anthropic may have achieved one of the fastest increases in enterprise value in modern business history. From $4.1 billion to nearly $1 trillion in roughly 3 years. Backed by Amazon, backed by Google, backed by Micron, competing directly with OpenAI, generating billions in revenue. The question is no longer, is Anthropic important? The question is, can Anthropic become the defining AI company of the next decade? If Anthropic IPOs tomorrow, what would you do? Buy immediately or wait for a pullback or avoid completely? Comment below and subscribe to Stock Market Analyst for more deep dive IPO analysis, AI investing opportunities, and growth stock research.